Today, I'm going to answer the top 5 most commonly asked questions about FHA loans. Did I say that right? What's going on, guys? Dane and Añar, mortgage lender here, and today I wanted to talk to you guys about FHA loans and the top 5 most commonly asked questions about them. Now, I do want to apologize for getting this video out a day late. This week's been a little hectic. I wanted to get this recorded and get it out there, but unfortunately my schedule didn't allow for that, so my apologies for being a day late on this. But let's get into this. Question number 1. What is an FHA loan? FHA loans were essentially designed to help the everyday American be able to afford to buy a house. Back in the day when you needed 20% to be able to put down on a house to be able to buy a house, it was almost impossible to get a house unless you lived in areas where houses were only $60,000, $75,000, $80,000. But now here in Washington, a starter house is going to be $300,000, $400,000 depending on where you live. So with an FHA loan, you fortunately don't have to put 20% down anymore, which leads me into my next question. Question number 2. What are the basic requirements for an FHA loan? Well, the basic requirements are pretty basic. All you need is 3.5% to be able to put down on a house, which allows you to be able to qualify for an FHA loan. The nice thing about FHA loans too is that they are able to work with credit scores as low as 580, and anything below 580 you typically just have to put more money down, but it can be done. One of the benefits of going with an FHA loan is that you are able to actually have your down payment gifted, keyword, to you from a family member to be able to help with your down payment. You're also able to pull that money from a 401k, a savings plan, any other accredited account that has a paper trail. If you have cash sitting in your backyard right now, from whatever reason you would have cash sitting in your backyard, you wouldn't be able to use it unless you are able to actually season it, which means that it's sat in a bank account for at least 90 days. Question number 3. What is PMI and why do you have to pay it? Well, there's 2 types of PMI. There's upfront mortgage insurance premium, or UFMIP, which you'll see on your disclosures. And then there's an annual PMI, an annual mortgage insurance that is paid out monthly. What that money is that it is charged, a certain percentage of the loan amount that you get is charged upfront. You can either pay that with your closing costs or you can just roll that into the loan, which is what most people do anyway. That amount of money is then deposited into a escrow account that the U.S. Treasury has set up to ensure that in case you ever default on your loan, they're still going to be able to make your mortgage payment. Your monthly insurance premium that you're paying, your PMI, your private mortgage insurance, that amount of money that you're paying every single month is also going into that Treasury account to ensure that if anything were to ever happen to you, if you lose your job, if you pass away, if something bad happens that you can't make your mortgage payment, your mortgage payments are still going to get made so that the bank can still essentially get their money for loaning that money to you to buy your house. Question number 4. Can you refinance into an FHA loan? Absolutely, 100%. If you're on a conventional loan, if you're on a VA loan, if you're on a USDA loan, you are more than able to refinance into an FHA loan. Now, is it the best option? Maybe. Who knows? I will never know until I actually take a look at your situation. Every loan scenario, like I've said in the past, is 100% different than the one before and the one after and the one that's being processed right beside it. They're all going to have their own criteria and they're all going to have their own characteristics, and whichever option is the best for you is the best option for you, and it's my job to help present those options to you so that you know if that's the best option. Question number 5. What is better, FHA loans or conventional loans? Like I said in question number 4, it all depends. Sometimes an FHA loan is going to be the better option. Sometimes an FHA loan is only the option that you have available to you. If you can go conventional, absolutely. It is a great option if you can get a lower interest rate. All it is very basic. You pay your principal, your interest, and you're done. And then obviously your taxes and insurance that you pay for as well. Pretty simple loan, right? With FHA, you've got your principal and interest, you've got your monthly mortgage insurance premium, plus your taxes and your insurance as well, your private home insurance as well. So it all really depends. Now, sometimes some people don't have enough equity in their house. Maybe their credit scores aren't good enough to be able to qualify for a conventional loan. It all depends on your situation. So it's up to me, your broker, your mortgage lender, your mortgage advisor, to be able to say, hey, this is going to be the best option for you, whether it's FHA, conventional, whatever you decide, it all depends. Anyway, guys, thank you so much for watching this video about the top 5 most commonly asked questions on FHA loans. And I really hope that you are able to come back next week to see what video I put up then, which I haven't actually figured out yet. Anyway, guys, my name is Dane Añar, mortgage advisor. I would love to talk to you about any mortgage questions that you have. Make sure to subscribe and hit that like button below so that way I know that you are watching these videos and that I should continue making them. Anyway, guys, thank you so much. Have a great day. Let's go get some coffee soon. Cheers, everybody.